Okay, GU-EU London session on Monday the 19th of Feb. The setup is a liquidity take setup. Step one, the actual liquidity take, right? Ideally, time-based liquidity. In this case, we're taking out the Asian high. So that's step one. It happens there, you get the wick. As soon as you see that wick, you start getting interested. You don't take the trade yet. Step two, you have to wait for either a break of structure or two PD arrays to get broken. Okay, so in this case it's both. There's a tiny fair value gap up here that gets filled as this engulfs down. Look, so that's you're going above Asian range, we get the wick and we're closing straight back in. That's a good signal, okay? This counts as one PD array. It's a fair value gap. Where's your second PD array? You're going to use this. That's your order block, right? So as soon as I get a close below here, I'm interested, okay? So as soon as that happens there, I've got my sell signal. But you don't sell from there. You don't chase it. You got to wait for that pullback to get the good price because your stop's going to be up here. And if it goes against you, you're losing too much. So what do? You just track it, okay? And you have your limit at around 50%, okay? So when this one closes here with the wick here, you have a nice range, okay? You got a wick on the bottom, wick on the top. You can enter in from that 50 with your stop at the top. You'd see you would come into some drawdown, not much, but then it goes your way, okay? So that trade happens in Q2, the second quarter of the London session, which is I think like 6 to 8, something like that, 6:30 to 8. So it's kind of early. Let's assume that you didn't make it in time, okay? And you just come to your desk at around like 9, okay? So you're coming to your desk, let's say somewhere around here, okay? Well, that already looks like a good setup, okay? Because everything's happened. You've had number one, liquidity take, the break of structure, and it's come back. But now I just want to illustrate that even if you took this here now as your next break of structure, so when this closes down here, you're breaking this structure, you just do the same thing. This becomes your dealing range. That's 50%. And you can just enter from the 50%, right, with your stop above there. The other thing is that this green line, this is true open of the London session. So if you're selling, you want to be above the true open. So everything about this setup is perfect. Just from the 50, you could have even got in at this deep discount 35. Either one is good, okay? Other things to note. You've got a nice little divergence here behind you, right? Higher high, lower high. Other thing, so this is the GU and it's taken liquidity to the upside and we want it to go down. What do we want to be seeing on the DXY? The exact opposite. Liquidity taken to the downside, right? But then we want that break of, we said either break of structure or two PD arrays. Oftentimes it means the same thing. But here, in order for it to be a break of structure on a 5 minute, you've got to wait for price to go all the way above here. You've kind of missed, yeah, well, it happens at a good time actually, 9:30. But the point I want to illustrate, if you were going to get in that Q2 trade, the first one, you just need it to, number one, take liquidity to the downside. Number two, close two fair value gaps. So depending on how you do it, like the most conservative one is this. As soon as this candle closes this fair value gap here, that is a confirmation signal. So the 745 candle, the DXY is telling you, yes, long dollar, short this thing. So that corresponds with this candle right here, okay? But again, you got to wait for the pullback. Even if you miss the trade, it doesn't matter. It's better to miss the trade and not lose anything. So that's on the GU. The EU pretty much gave you the exact same scenario. So number one, Asian high is taken, okay? Number two, this is slightly different. Look, if you're waiting for a break of structure, on here, so in real time, you'd probably just take the GU. Why? Because you break the structure higher. There's a higher structure here that breaks. What we have here is the structure's all the way down here, but you can do the same thing. If you want to trade this short, let's say, I don't know, for example, the The yield spread is much better on the German. The 10-10 spread is better. For whatever reason, you just wait for this second PD array. That's fair value gap, fair value gap. As soon as you close below it, you've got your sell signal. But you don't sell from there. You want to get a better price. So you can just fib that up, enter at the 50. And again, same with the GU. Even if you missed it because it was too early and you're turning up here, you could have turned up here, seen this structure broken. So we've got 1, liquidity take, 2. These PD arrays disrespected. A little retracement. Now this second break of structure is looking even better. But we need a decent, what do you call it, premium. So in this case, anything above the 50. And you'll see on this one as well, you did get just a brief retrace up above this true open before it takes off and goes down. Okay, so that's the first trade in London. It was a liquidity take break of structure. The other trade that you take is the ODR pullback. So this was a great day, Monday, because you had both opportunities available. Look what happened. So we've closed below on the EU, the ODR. So as soon as that's happened, we are looking to stay short, right? But short from where? We need a deep pullback, and we get that pullback here. When does it happen? It happens in Q1 of the New York session. So that's like 11:30 a.m. All right. Very simple, just 50% pullback to the ODR. Okay, so you could have waited for that to happen, for it to engulf, then you just enter here. You know, tight stop above there. And that was a successful trade. And on the GU, it's pretty much exactly the same thing. So we have the close below, right? And then in the start of the New York session, or the first quarter, we get a perfect pullback to around 50% of the ODR. It engulfs. The only thing here is that you would have missed the trade if you put your entry there. It never comes back to give you the pullback. So that's Monday session. 2 good trades. Liquidity take, or the breaker structure, and ODR.